Hey everybody, Stephen Sitkowski here, leading educator on how to trade the financial markets. And I wanted to show you the epitome of a nice bullish stock. And before I get into that, let's take a look at the markets because we always want to be trading in harmony with the overall market. So let's check out the chart and the intel on the S&P 500. All right, so as we click on the SPX. Well, first of all, before we do that, you can kind of get a pretty good view over here on the left-hand side. And let's go to the last month or so. It's going to show us the 52-week highs and the 52-week lows. So we can see, look at this, that we had 115 stocks reaching a new high, only 26 reaching a new low. So what does that tell you? That's on the New York Stock Exchange. If we went to the NASDAQ, same kind of thing, 114 and 32. So we can see that overall, the market has been bullish as it relates to 52-week high and 52-week lows. If we look at the chart on the S&P 500, we see the same kind of thing, right? So we see down here, look, boop, boop, boop. It's moved from 287 to 314, which is awesome. So everything is bullish. So if I look to take a bullish trade right now, that would make all kinds of sense. So I'm going to take you to, I'm going to show you two stocks. I'll take you first of all to Baba. And let's look at the dashboard. So the dashboard gives us a pretty good idea of what's going on. So I'm looking over here at a 3-month chart. I'm going to look at a 6-month chart as well. You can see that nice upward momentum. Beautiful. We can see that institutional ownership is going up right now. Institution went up 3.11% to 41%. P ratio is 35, which is a little high, but the PEG, and I like stocks particularly that have a PEG of less than 2.5. This one is at 1.31, which means relative to its earnings growth rate, the stock is pretty cheap. If we look at the fundamentals, sales are going up, asset value, equity, net income, all the profitability numbers, I mean, everything looks great. Now, the last earnings, the actual, it didn't come in as we were hoping, but the trend is up, future estimates are up, growth rate is up. All that is good. Baba does not pay a dividend, and the next earnings per share doesn't come out until 58 days from now. So Alibaba is basically China's version of Google. But you see all the fundamentals on this look really good. Sales growing at 31%, assets 13%, equity 15%, net income 83%, and the earnings growth rate is forecasted at over 20% per year. This is an incredible company. Now, what is your risk in this? It's a Chinese stock. So, to the extent that our relationship with China, at some point we were threatening not to allow them on our stock exchange. That's not going to happen. Look at this bar down here. It looks at all 4 measurements, which would include the technicals, the inner circle, the valuation, and the fundamentals. Everything on here is green. I mean, this is as good as it gets. You could do anything with this. You could buy call options. You could do, it looks like we have support right here, right around high 180s. So you could do a bull put spread where we shorted this, you know, right at that level, 187, 188, right in there, and then we'd buy a put below it. Or if you just wanted to keep it simple, you could own the stock. Now the stock, a little pricey, $200 a share, so 100 shares, gonna set you back, you know, 20 grand. Or you could just buy a call option on it. So if you wanted to do that, we go to options. Calls are on the left. Typically we go out, you know, around 90 days. So January, February would bring us out 82 days. If you want to be more conservative and you've got, you know, bigger money, you could buy an 82 Delta or a 78. Going to run you around $25 per share, $2,500 a contract. If you wanted to be more aggressive, more speculative, you could, in fact, you know, go out to like 30, so 28, $4.80 per share. That'd be $480 per contract. So those are a couple of different ways that you might be able to, you know, to profit from this. I'm going to show you one more. Centene. And again, if we look at the last 3 months, beautiful. We can see that the insiders, they've sold off a little bit. It's not huge. Institutional ownership is 93%, which is great. It means the big institutions, they have the big research departments, are on this stock, which is good news for all of us. The PEG is less than 1. Look at all the green showing up here. Sales, asset, equity. So if we wanted to dig into the fundamentals, sales are going up about 4%. Net income is about 6%. They're looking to grow their profits at about 14%. We've got a PE ratio on this of a forward PE of 13. They're in the healthcare industry. I mean, this is a relatively inexpensive stock, and again, they do not pay a dividend. But you do the same thing. You know, look for, if you wanted to do, now you might want to own this stock, right? It's a $60 stock, so you could buy 100 shares for $6,000 if that fits into your budget. You could do an option on this. So again, if you went out, in this case, 110 days, and we did a delta of around 30, there's 34, $270 a contract. So that ought to fit within just about everybody's budget. But that's what two real high quality bullish companies look like. So if you have not subscribed and you like information like this, please do. If you click on the bell, it's notification alerts. Every time I post something new, you will know about it. And please, this is sort of a grassroots movement. I've done no advertising on this at all. If you can tell other people about it, if you like it and you see that this is of value, that'd be fantastic. All right, till next time, I hope everybody had a marvelous Thanksgiving. God bless you. I'll see you soon.